Starting, I think, with safety, the group continues to make tremendously good progress on improving safety. Total recordable case frequency rate down over 20%, lost time injury frequency rate down about 50%. So those are exceptional achievements. At individual sites, we've had really good achievements. Venetia has just reached 1 year LTI free, Voorspoort 2 years LTI free. Those are exceptional performances throughout the year. Gachakwe has reached 1 million hours LTI free, which is even more exceptional in the context of a project that's being built. So that's a tremendous achievement too. And Victor Mine received the prestigious John T. Ryan Award for safety. So very, very pleased with the safety performance across the group. Of course, you're only as good as you are today, so that is no reason for people to be complacent, and we need to continue to focus more and more on safety as we go forward. Financially, we had a very good half year. Profit just under $600 million, on diamond sales of just over $3 billion, and total sales slightly more than that. So a very good first half of the year, particularly when compared to the second half of last year. So industry conditions were clearly very challenging at the end of last year. But some of the decisive action we took towards the end of last year, including less production and very, very focused and targeted marketing campaigns, started to pay fruit and bear fruit in this first half of this year. So the industry indigestion in the system started to work its way out. Sales were considerably better than we'd hoped they would be in the first half of the year. We sold 17.2 million carats in the first half of the year, which is a considerable amount more than the 13.3 million that the group produced. And that just reflects continuing normalization of the midstream value chain. So at a macro level, the main market in which we sell, the US, continued to perform very well, and that's very, very pleasing. Still about 45% odd of global market share. China slightly more difficult, showing a little bit of growth, but not the growth of the heady days of 2011 and 12. And Japan showed moderate growth for the first time in some time. India, on the other hand, was rather disappointing, not helped by the 1 month jewelry strike when the jewelry industry went on strike in relation to some governmental regulation changes. So India particularly disappointing, but good opportunity for improved performance in India in the second half of the year. So even though we've had a very good first half of the year and we've cleared some of the inventory backlog that both we had and out there in the industry, I think it's time to be cautious for the second half of the year. Global conditions continue to worsen, and so things like the impact of Brexit and the unrest in the Middle East and Europe could be very worrying in the second half of the year. Having said that, the US continues to be robust. So I think for us the word is cautious optimism in the second half of the year, and I think we can expect things to be flat to mildly positive in the second half of the year. The production across the group in the first half has been very sound and solid, so the 13.2 million carats produced pretty much on budget. We see no reason to change our production guidance for the full year of 26 to 28 million carats. Each of the operations has performed well. We've saved about $200 million of cash savings out of things like capex savings, disposals, improved costs and improved operations. So a very pleasing year so far for the operations in the group. The projects in the group continue to go well, and despite the cautious macro conditions, we continue to invest heavily in projects. Gachakwe, which is the largest new mine to come on stream this year, and in fact for many years, is very, very close to completion, and we can expect commercial production very early next year. Cut 8 continues to go well. We've now stripped about 75% of the waste on the Cut 8 project, and that's gone particularly well in terms of both cost and time. The big project, of course, remains Venetia Underground, where the project is well underway, a little short of a third of the way into the project. You'll recall we're spending up to $2 billion in Venetia to go underground, and we're on track to go underground by 2022. And the last big project is the SS Nujoma, which is the most sophisticated sampling and exploration vessel ever built. It's been built in Norway, and the production has gone very well. It's well ahead of schedule in terms of time and cost. and is in the process of being moved now to Cape Town for commissioning to start. So we're very pleased with all 4 of the projects that we're involved in. We have a number of pilot projects in areas where we feel we can grow adjacent businesses in our business using some of our core strengths. 2 of those are the Diamond Recycling Project, the consumer recycling project in the US, which is a small pilot which has gone officially live this year, and we continue to make good progress on that. Another one is in De Beers Auction Sales, where De Beers Auction Sales is piloting auctioning exceptional stones for third parties. So provided the third parties can pass our very rigorous selection and BPP criteria, we're looking at ways of expanding our business into adjacent areas there too. FOREVERMARK continues to grow well, and doors continue to be signed up. Doors up about 6.5% in the first half of the year, and very pleasingly opening some FOREVERMARK stores in places we've never been before, such as Hungary, Thailand and South Korea. FOREVERMARK also doing a number of very innovative things. Launched the Black Label product in Las Vegas at the end of May, first of its kind, and launched the Capriccia nose and earring collection in India. And very, very pleasingly, that product received more than 2 million hits in the first month it was available on Facebook. So marketing in the right areas on the right media too. So we're very excited about the DPA and the possibility of the producers together looking at marketing generically and look at stimulating demand on a generic basis for the product. But it won't divert our focus, our long-term focus, from building our strategic brands. So we did see continued investment in marketing through the course of last year. This year, Chinese New Year, heavy investment there, and you can expect to see a considerable amount more in the marketing from us, from both De Beers and FOREVERMARK in the second half of the year. For example, the Ever Us collection, 2-stone collection in the US, you will see a considerable step up in television marketing there in the second half of the year. The Namibian sales agreement is another significant step forward in cementing the business. We signed the first ever 10-year agreement with the government of Namibia earlier in the year. All agreements before have been shorter than that, so that was tremendous. We continue to be very committed to the local beneficiation industry, so we'll offer via NDTC up to $430 million of goods for polishing and cutting in Namibia every year. In addition, all Namibian specials and exceptionals will be offered in Namibia in the new contract. So we're very pleased with that. The contract does see the introduction in Namibia of a small window and the government will market 15% of Namdeb Holdings productions through the window. But a very pleasing outcome. Took a long time, but I think the outcome is more than acceptable to both parties. So very, very pleased with that.